Enacted in 1977, the Community Reinvestment Act, or CRA, encourages financial institutions to help meet the credit needs of the communities they serve, including low and moderate income neighborhoods, consistent with safe and sound banking practices. This video is part of a series on CRA topics produced by community development offices in the Federal Reserve System to inform the public about the CRA and how it helps bring much-needed capital into low and moderate income neighborhoods throughout the country. This video is different from our others because rather than discuss regulatory revisions, this video highlights some of the leading practices that our teams have observed in CRA programs across the country. While we did not attempt to compile a comprehensive list of positive attributes, we thought it would be beneficial to share some of the characteristics of effective CRA programs that we have encountered. Our intent is to inform community groups, community development practitioners, researchers, educators, government officials, and others about what financial institutions need to do to comply with this important regulation.
Financial institutions with strong CRA programs appoint an individual to ensure that the bank is in compliance with the CRA. These individuals, typically referred to as CRA officers, coordinate their bank's CRA activities. CRA officers help the bank identify opportunities to meet the credit needs of its community, consistent with its business strategy and resources. The CRA officer also prepares information about the bank's CRA activities to share with their regulators during their examination. We would like to share the top 5 observed leading practices that contribute to effective CRA programs that we have encountered. First, an effective CRA program entails research and planning. The best CRA program officers educate bank staff on the CRA's requirements and the particular credit needs of the bank's assessment areas based on their research and outreach in the bank's community. They also work across the various product line departments to engage them in the development of an action plan that matches the bank's mission with the credit needs of its community, particularly in low and moderate income areas. Often banks establish internal CRA committees to review the volume and geographic distribution of the bank's loans, service activities, and investments. These committees report directly to the bank's senior management and board of directors. Second, the most effective CRA programs accomplish their goals by finding effective community partners. These banks foster strategic partnerships with organizations that can help it reach low and moderate income individuals and communities, as well as small businesses. For example, a bank that specializes in small business lending may find it effective to partner with a technical assistance provider, such as a small business development center or community development financial institution that can help potential borrowers develop viable business plans. Similarly, a bank offering mortgages may want to forge relationships with organizations that provide homebuyer education, down payment assistance, and other assistance to first-time homebuyers.
Third, the best CRA programs understand the needs of the communities they serve. By having a deep understanding of the community, its demographic and economic conditions, and the people and organizations that are actively engaged in making it a more vibrant place, the bank can identify investment and lending opportunities that can make an impact in the community. In order to deepen its understanding of the credit needs of its assessment areas, many banks supplement their analysis of publicly available demographic and economic data with information gleaned from regular engagement with its community partners and government agencies. Ongoing discussions with community stakeholders help banks identify opportunities such as upcoming tax credit or bond offerings that will help close critical financial gaps for a community project. Often, bank staff serve on nonprofit boards and local committees to help the bank stay abreast of community needs and find CRA opportunities. Fourth, successful CRA programs tell a comprehensive story about how they are helping to meet the credit needs of its assessment areas when examiners arrive for their periodic CRA evaluation. To tell that story, banks have typically tracked their lending, investment, and service activities consistently. By monitoring its progress in this way, there are few surprises at the time of the evaluation, and the information is generally in a format that is easily understood by the bank's management and regulatory examiners alike. When examiners arrive, these banks generally have information on the community needs as well as the performance of their peers in the market ready. They also tend to make special note of activities that are particularly responsive to the community's needs, note those activities that are complex or innovative, and highlight any activities where they provided demonstrated leadership.
Finally, successful CRA programs keep abreast of changes to CRA guidance and procedures. The regulators periodically update or revise the interagency questions and answers on community reinvestment, referred to as the CRA Q&As. The Q&As are lengthy and explain how the regulations are interpreted and applied by the agencies. CRA officers keep management and staff apprised of changes to the guidance and how it may affect the bank's evaluation. Membership in trade associations and local CRA officer networking groups help bank staff stay on top of policy changes. The regulators also offer a variety of ways in which to keep banks informed, including regional CRA roundtable discussions and the biennial National Interagency CRA Conference. And of course, a bank's examination staff is always available to answer questions. Each of the 12 Federal Reserve banks have community development offices that offer programs to help banks meet their CRA obligations. The mission of the community development offices is to promote fair and informed access to financial markets for communities and individuals, including the particular needs of underserved populations. To do this, we convene bankers, community organizations, and government officials to educate everyone on CRA, foster collaboration on community and economic development initiatives, share our applied research, discuss emerging issues, and help create and sustain multi-sector partnerships. To learn more, visit bedcommunities.org. If you have any questions or comments, please reach out to us. We're always listening.